Hey everyone, this is Kevin Zimmerly with Maven Realty. Let's talk about real estate. In this video, I'm going to show 12 real estate terms that I think you should know. All right, stay tuned for the video. All right, the first term I have is amortization. Amortization is when the lender gives a person a loan to buy the property. That loan is going to be paid over time, so amortized over time. And you can pay off this debt in 30 years, 15 years, just depends on what the buyer coordinates with the lender. And usually you're going to have an amortization table where you can see where the payments go. And you can see the interest and what's called the principal. Principal is what's actually getting paid down, whereas interest, that's going straight to the lender as profit. And in that table, you are going to see the interest. So the interest, or the APR, the annual percentage rate, is the interest what you're paying over time to the lender. If you think about it, the lender's not going to give everyone money for free. They need to make money on the side too. So that's usually in the APR, or the interest rate. And right now it's between 3 and 4%. A year ago though, it was in the low 2s. So it's a fluctuating market, the interest rate. And it's really hard to time. But if you get a lower rate, the usually means your payment will be lower. Appraisal. So when the bank gives out a loan, they're going to want to know the value of the property. And appraisal is done by an appraiser, and they're going to take similar properties in that area with the same square footage, same bedrooms, baths, same lot size, same type of house, and they're going to see what these other homes sold for. And with that information, they can calculate what the property's worth. Now, if you were buying a house with cash, you're not going to need an appraisal because you're buying with cash. You're not going through a bank. Now, if you were going to refinance that property, then yeah, you'd probably make sure you're contingent on an appraisal. Appreciation. We all have heard that the housing market is going up. Values are going up everywhere. This is basically appreciation, where the value of the properties go up over time. This is not always the case. Properties can go down in value. A broker. A broker is a person that is able to represent a buyer or a seller in a real estate transaction. Now, I work under a broker. I have my real estate license and I'm a realtor. I can get my broker's license and become my own firm if I wanted to. But all agents need to hang their license with a broker. Closing. Closing is a good thing in real estate. It's not always a good thing outside of real estate when something closes, but in real estate, getting the closing table, that's the end goal, right? That's when the buyer actually buys the property and owns it. And in South Carolina, this is done at an attorney's office. What happens at the closing table, we have a document called a deed. A deed is a legal document that represents the ownership of the property. So at the closing table, the ownership transfers from the seller to the buyer. And this is done by an attorney. In other states, it can be done at a title office. Foreclosure. Foreclosure is a bad thing. This is when the lender takes back the home from the homeowner. And this is usually due from the homeowner not making payments. They're not abiding by the contract that they signed with the lender. So the lender has no choice but to take back the home. Foreclosure can be avoided though if the homeowner were to sell and basically pay off all the debts. Mortgage. A mortgage is a loan that is used to purchase a home or other form of real estate. This is usually coming from a lender or a bank. Escrow. Escrow is a third-party account, holds money and it's protected until the end of the transaction. Usually, when the buyer is interested in a property, he's going to place an earnest money deposit on the property. Earnest money is good faith money that the buyer is going to purchase the house. The higher the earnest money, the more they're interested in the house, and the more confident the seller will be. And once the transaction closes, that earnest money will be transferred to the seller. Now, after you do close, usually you'll have an escrow account that's going to hold money and for insurance and taxes, and basically think of it as an account that your mortgage payment is going to be going into this escrow account, and it's going to pay your taxes and insurance and everything from there. Title is a record of who owned the property before or who owns it now. Attorney is going to be looking at the title work to make sure the seller actually owns the home and the seller is able to sell the home. He's also going to look at if there's any liens on the property or debts owed. This is all done prior to the closing table by the attorney. All right, everyone, thank you for watching. This is the 12 real estate terms that I think you should know. Hopefully I cleared up any confusion with that. If you have any other terms that you're unsure of, just let me know and I can help you out or make another video. Thanks, everyone. Like and subscribe.